Good evening, students. So, welcome to this session on EIS. Today, we'll be talking about chapter 2. Now, because we have this early login chocolates, so today it goes to Varsha. Many of you have logged in, but Varsha was the first. So, this e-chocolate goes to Varsha. Let us start. So, good evening to Dhyanesh, Jash, Jyoti, Kasif, Pritika, Mitesh, Bhai. Okay. Good evening. So, let us start. Oh, so it's further gone down. Bal Vinodhini, Lalit Priya, G.R. Kanakarini, and M. Bharat. Yeah. Okay. So I'm starting. So because last time I said that any query you have on chapter 1, please do put. Otherwise, we'll start with chapter 2. So this is the syllabus: automated business process, financial and accounting system, information system, its components, e-commerce, m-commerce, and emerging technologies, and core banking system. So we talked about automated business processes. Now let us talk about today the chapter 2, financial and accounting system. Now again, because we have 3 days, see today's lecture on this financial and accounting system will be more towards creating a reasonably good concept on a term that as we go ahead, I'll be talking about it. So what I have tried to do, I've tried to bring a live show of how probably that system works. So it's real way of learning how the system adds value to organizations implementing that category of system. So let us talk about it. So these are our topic headings: introduction, ERP versus non-integrated system, risk and controls in an ERP, audit of ERP systems, business process module and their integration with financial and accounting system, reporting system and management information system, data analytics and BI, business intelligence, business reporting fundamentals of XBRL. XBRL will be extensible business reporting language, applicable regulatory and compliance requirements. So before we go ahead, because the whole chapter headings have come, so let me brief talk about that introduction as things will be. ERP and non-integrated system. Now see, if you read the header, it says ERP versus non-integrated system. In chapter 1, we also talked about this integrated system. So integrated systems are basically, those are interlinked. So a value in a system is reflected, or it hits a decision to be taken in another system. So that is what you call as integrated system versus non-integrated system. Now, practically the way business is developing globally within India, the existence of non-integrated system is per se not there. What organizations may have, they may have a part of the whole system that is non-integrated into the main system. But again, when you have a non-integrated system that is not linked to the main system, it creates issues. So we'll be talking about that. Then the word that I wanted to emphasize was ERP, enterprise resource planning. So today's session will be much on enterprise resource planning. What exactly is this? What is this system? What is this software? What it does for an entity, how entity benefits when they implement ERP system. So it's a phenomenal discussion. What I've tried to do, create a live example of how probably an ERP system is going to work. And in that example, we'll see the level of integration you can create in an ERP system. So if you read the header, second header, ERP versus non-integrated system. So there's a by default assumption, a deeming assumption that ERP per se are integrated. So it's a very valid conclusion. So when I say enterprise resource planning system, I am basically talking about integrated system. So what is integrated systems? Where the value of system, value of one location, one item, one parameter is reflected at other location, or the impact is there. Like the example we took, that if my inventory level goes to reorder level, and it is going to trigger a purchase order. So that makes my inventory system is linked to my purchase system. So this linkage creates an integrated system. And when you create this linkage across the organization, every function is linked like that, then you create what is called as ERP. So when we go to ERP, we'll be having a real good discussion on that. Then risk and controls in an ERP. Now we need to understand that any system that you are going to put in place, it is going to have its own set of risks. When we talked about chapter one, day one of chapter one discussion, you all answered, most of you answered this question correctly, that risk can never be brought to zero. ERP is a good system, but does it lead to risk being brought to zero? The answer is no. So whenever you have systems, you need to have a understanding of the risk that system may be affected with and how you mitigate those risks. So you have to implement controls. So that is how risk and controls in an ERP. Then audit of ERP system. Now, please understand, in chapter one also, I told you that once you become chartered accountants, one of the things that is going to give you lot and lot to learn and encash upon was consultation for business process automation. In chapter two, that opportunity you get with audit of an ERP system. So once you become chartered accountants, those of you who have flair for system, who want to learn system, who want to do good in system, this is going to be immense opportunity. And believe me, the value that it creates in practice is going to be phenomenal. Audit of an ERP system. So to that, we are going to learn this aspect. Then business process module and their integration with financial and accounting system. Now, business process module, please understand, accounting and financial, on a, imagine looking to business from a owner's perspective. Okay. So I'm putting this question to you. I'm bringing a question that is more relevant in part B of this module, that is strategic management, that the subject you have. On an assumption that you all have read it, I'm asking this question to you. So see, just imagine yourself as a managing director of the company. So I'm giving you 2-3 options. You have to say which you are going to put your most focus on. So if you're managing director of a company, your focus will be on, say, for example, profits, say, for example, value creation, say, for example, having a very good accounting system. Please understand. So 3 options. All are important. You have to arrange them chronologically, which you are going to focus as managing director of the company. So say profit, wealth creation, accounting system. Profit, wealth creation, accounting system. Give chronological, which are in ascending order of relevance. So the most relevant, descending order of relevance, most relevant has to come first. You have to imagine yourself as a managing director. Once you answer this question, I'll bring this line again, because this chapter is a phenomenal chapter to create an understanding of how businesses are going to look to their system. So automation was one part. Now, once you have automated, how you are going to visualize your business based on the system that has been created. So business process module and their integration with financial and accounting system. So what are the options? You have to arrange by descending order of their relevance. Most relevant has to come first: profit, wealth creation, or accounting. Okay. Then once you answer, we'll read this line again. Reporting system and MIS, very, very, very important. Please understand, organization expend huge amount of money on this single line. How they ensure that the reporting system is real time and the data that is generated is correct. And because based on that data, organizations are going to take decisions. So that value has to be brought in reporting system and MIS, management information system. I've already told you that whatever we do today has to be linked to this device, that is your mobile. Please understand, if you say reporting system MIS, I'm not talking of desktop, laptops, PDAs like that. I'm only talking about mobile. How you enable those things to appear on my mobile. That is the thing that you are looking at. Then those of you who want to start something different in your life, once you become chartered accountant, this line is important: data analytics and business intelligence. Believe me, this is the growth graph of this is like this, 45 degrees, and it's going up and up and up. Data analytics and business intelligence. The world today, tomorrow, and at least 10 years ahead is basically data and data analytics. You see this whole, we did talk about this data privacy. We are going to talk more on data privacy as we go ahead. So the it is said like data is today's gold. So the one who has data, he or she or it can rule the world. That is the level data has been got itself into. So data analytics and business intelligence, that is for next 10 years. If you want a growth pattern to the whatever you are doing, select this line. And business reporting and fundamentals of extensible business reporting language. Now, or like companies across India, they file their audited balance sheets, they file their annual returns to the Ministry of Corporate Affairs. So how does ministry see whether the reporting is proper or not, whether it is in a standard format or not? So extensible business reporting language is basically creating these reports in a standard format so that the government or the agencies or the stakeholders can do a good data analysis of these reports. So please understand, everything will be linked to the line third from bottom, data analytics and business intelligence. We'll be talking more on this and applicable regulatory and compliance requirements. So let us see how you answered the question that I have put. Okay. Yes. So Siddhant, value creation, profit accounting system or wealth creation. So that is the format we were looking. Most of you have answered correctly. So Dhanesh has a point for me. He wants all of you to be given time to think. Okay. So good. So value creation, profit and accounting. Now let us read that line. I'll read that line again. I wanted these answers. So business process module and their integration to financial and accounting system. So value creation, that means those aspects of my business which are relating to value creation, relating to increasing profit, they will be integrated to my financial and accounting system. So financial accounting system is important, but which carries more, which is more critical for success of business are those modules, those departments, those functions which relate to wealth creation or value creation. So point number 4 is exactly that, that how you ensure that this value creation module, value creation function department is linked to your financial and accounting system. We'll talk lot of practical examples of companies which have implemented their enterprise resource planning system like that. So that is going to be a good discussion. Then there's a question on chapter 1 on flowchart. So just give me a reminder. I'll as soon as we reassemble after the break, do tell me. So we'll answer that question now. So we have talked about this concept of integrated, non-integrated system. Let us go ahead. So integrated systems are those systems where the value, the data element, the transaction, if it hits something like reorder level in case of inventory management system, it automatically hits the purchase system. It creates a purchase order. So this becomes an integrated system. Same example that we took in chapter 1. Then coming to the core of today's discussion, this ERP versus non-integrated system. We put lot of effort, time in understanding this aspect. Believe me, today, the way world is growing, the way systems are growing, the way business is growing, organizations are putting lot of money and effort in creating integrated systems and more specifically creating what you call as an ERP system. So I'm just giving this, try to answer this because we are online. So I'll not be able to name the entity, but take it as a case for you. So this entity that I'm talking about, keep your pen pad ready. You will have to answer a question. So this entity I'm talking about, they implemented ERP across the organization. The organization had 500 working locations across India, including depots where the products will be delivered, including their factories, manufacturing locations. So 500 locations they implemented their ERP system. The total cost for implementing ERP system came to the organization, that was rupees 100 crores. So organization expended 100 crores to implement the ERP system. Now this 100 crore will include the hardware, the network, the training, the software, the implementation cost of the software, the supplies, the data center cost, the disaster recovery center cost. So everything is part of this 100 crores. So they expended 100 crores and implemented ERP system covering 500 locations across India. Suppose the implementation is done today. From today onwards, they started saving rupees 40 crore per annum. Please understand, they've expended 100 crores and from today itself, they started saving 40 crores per annum. What is the ROI, return on investment, and what is the payback period? So 100 crores they invested, a phenomenal implementation of ERP system, 500 locations covered, and from day one, they started saving 40 crores per annum. So two questions you are answering, the ROI, the return on investment, and the payback period. So now we have brought another subject as a part of our discussion, that is financial management. So I told you ours is a king subject. Okay. So ERP versus integrated system. That is exactly that we want to talk about now. Yeah. Uh, Sonal, ask any question. I'll keep a tag of your questions. Yeah. Great. So we already have, yeah, please ask. We already have the right answers to the question. You are fast this time. Good. So Petla Wala Khojema, 2.5 years and ROI 40%. Imagine. See, just understand. That is the impact this system creates. So that is phenomenal. So the core idea is what? That you have to implement it properly. There, that payback is phenomenal and it's huge. 2.5 years is like nothing. Please understand. Okay. It's just like you started today, the payback is there and profit after that. So it is going to add to your bottom line. Okay. So let us start. So all of you have answered correctly. Thank you. 100% correct answers. Now, ERP and non-integrated system. So what we are going to talk about. So system, process, the concept of computerized accounting system, the technical concept, something to talk about non-integrated system, not relevant, but part of the syllabus, just it's a one para discussion only. ERP systems and benefits of ERP system. One of the benefit I've already shared with you, it generates a phenomenal ROI. Okay, let us continue. So what is a system? System is a set of principles or procedures per which something is done or organized scheme of things, methods that you are adopting to do. So that is your system. Okay. So that is how systems are going to work. A set of things working together as a part of mechanism or interconnecting network or a complex whole. That is how systems are. Then what systems will have? So generally systems will have input, output, process, feedback mechanisms. They maintain an internal steady state despite a changing external environment. Yes, so systems are like inherently not systems inherently are generally not affected by external environment because systems have something that you may call as a boundary that keeps internal part of the system away from the external part of the system, have boundaries that are usually defined by system observers. So that is what is system. So it has input, it has process, and it has output. Process is a process is defined as a sequence of event that uses input to produce output. So input, process, and output. So the intermediary step is the process. And then if you just want to imagine, so I've given this question to you, just write the steps. When you order food online, book a railway ticket, purchase a product through an online app. So what is the, okay, let you answer this question. You are buying a product online. So I want you to write what is the input, what is the process, and what is the output. So IPO, I generally say initial public offer like that. So for a system, there is an input, there is a process, and there is output. So suppose you're buying something online. So what is your input? What is your process? And what is your output? Right in the chat. And once you answer, we'll find time to discuss each of your answers. Okay. So process. So process is that intermediate steps, which is converting the input to the desired output. Imagine a manufacturing concern. Input is raw material. Process is conversion of raw material into finished goods. Output is the finished goods. That is. Or process, you can say, is the process of conversion, process of manufacturing. If you go to accounting standard 2, they call it cost of conversion. So that cost is part of the process. Okay. Then concepts of computerized system. So there's a question. So there's a question relating to the module. I'll tell you. Yeah. So we are on page 2.4, 2.5 of the module. I think Kanak Karini asked 2.4, 2.5. Yeah. Then concepts in computerized accounting system. So we have got the answer. Input is or place order, payment transaction, delivery, applying filter. So input is money. Food is being prepared. Output is food delivery. Great. Input is selecting of the product, giving delivery address and payment. Okay. So selecting is input, giving delivery address is process, payment. Okay. So you have tried to answer. So every system is going to have an input and a process and an output. So that is valid. Okay, good. Now, concepts in computer accounting system. So let me see. Many of you have answered. So I'll just read the name. Most of you have answered correctly. I'm reading the name of those who have given the input to the question. So Jaspreet, Sapna, Kanakharini, Kiran, Alok, Prabhat, Priyanka, Jash, Dhyanesh, Bala Vinodhini, Khujema, Ilayya, Bharti, Bharat, Garvit, Jyoti, Tisha. Okay, so good, very good. So that is now coming to the next very important discussion, concept in computerized accounting system. This includes some discussion on data, vouchers, voucher numbers, accounting flow, type of ledgers, and grouping of ledgers. Now, please understand, though, even if there is a chance that many of you probably have not started your articleship, but many of you have already started reading accounts, reading audit, those of you who have started going for audit. So what I want you to say is, please say that those who are familiar with these words given on the slide. So you have to only say, I know. That is. Okay. There is a question. Allow me to answer that question. Sushil Kumar Barik. What do you mean by non-integrated? Yeah, Sushil. So when we started, we did talk about. Now there is a separate heading, Sushil, on non-integrated system. But because you have asked, so let me just brief you. Non-integrated systems are basically those systems where the departments, functions of an organization do not talk to each other. So value in one department is not creating a trigger in other department. Just the same example that we took for integrated system. Say, for example, my stores department has defined a reorder level. Now, reorder level means that I have to place an order for purchase. So in an integrated system, what will happen? Any item which hits a reorder level in stores department, it will automatically trigger what? A purchase order. But if the system is non-integrated, this automated trigger will not be there. Now, if automated trigger is not there, that means there is a chance that there is a delay, a manual delay, a human delay in sending the purchase order because it is not automatically done. So if the purchase order, suppose, had to be done today, but there is a 7 days delay. Now, if 7 days delay is there, your item had hit reorder level 7 days back. That means by the time you send the purchase order to the vendor and by the time vendor delivers the goods to you, there's a big risk of production being stopped because you will be stock out. So that systems are non-integrated where the value of one department is not linked. It does not trigger an action in other departments. So those systems we call as non-integrated system. You have to say, yes, Sushil, you have understood it. Yeah. Then, Sharon, I think there's some issue. You are typing once only, but I'm getting 10 inputs. 10 times your name comes. So input in yarn, process, convert yarn into cotton. No, no. Sharon, let me do it for you. So cotton is the input. Process is converting cotton into yarn, and then the whole machines. And I visited many cotton manufacturing units. So there's a big process of converting cotton into yarn. So that conversion process is what you call as process, and the output is yarn that is on the cones, which is wound on cones. Okay. No, Sonalin, the whatever you have said, it is not there. Suppose you say SME or MSME, micro, small, medium enterprises or small, medium enterprises. Most of those enterprises use the software you have put in your query. Okay, then, yeah, I know. Some great, Jasprit, good. No, Alok, that is not the company, but because being online, I don't want to share it. But the name you have said is not the correct answer. Great, Jasprit. Okay, Sharon. Yeah, again, there's some issue, Sharon, in your system. Okay. Now, so many of you know it. Let us discuss. We are going to have a phenomenon, and believe me, I'll be asking many, many questions on these because see, what is the idea? See, what I basically want all of you to learn that the definitions of all these words will be simple. Please understand. What I want all of you to learn is that how these are going to be converted into system. What will be their relevance once they are converted into system? What things we need to vouch when these are being converted into system? Believe me, today, wherever you are going for an audit, most of this transaction, most of these headers will be part of the system that you will be auditing. So that understanding has to be created for all of us. Okay, let us do it. Good. So I think I want to give a e-chocolate to Prabhat for putting this. I love this. Uh, Prabhat says, sir, when we ask a question, it's an input. Message transmission, the way I get it is the process, and output is, or I would say output is when I read, or Prabhat, with your permission, I want to say output is when I answer the question. Great. So you get an e-chocolate. Thank you. Please don't guess the name of the companies. I'll not. Okay, but just your answer is also not correct. Leave that. Let us continue. But keep this discussion on. This allows the energy to be there, and this creates a phenomenal understanding of the process. I've already told you that whatever we do, the more we understand, the more we remember. So the remembrance part, we want to reduce that part through understanding of the system. Okay, data. Now, see, believe me, today we are all data. We are data. So just with your permission, I am sharing this. Me for institute, I have a membership number, that is data. You for institute, you have a student registration number. Your student registration number starts with 3 alphabets that tell which region you are. So all that is data. Your mobile number is data. Everything today that is being used is data. So that is very, very important. Just for the sake of it, I put a query on the slide. Do you guess, can you get what is the trouble in this? Okay. Now, so just understand, see why things are so important and critical. You know, we already have more than 110 registered mobile numbers across India. Now, when we have more than 110 registered mobile numbers across India, it basically means that all 10 digits of the mobile are consumed. You know, when I started, when I had my mobile, so you probably, none of you will know it, but if you ask elders in the family, they will tell you that the mobile number series was indication of the mobile service provider. Today, you have a mobile number that starts with 79. So if I receive a phone call 079. So 079 is STD code for Ahmedabad and also mobile number. 080, it's a mobile number and STD code for Mangaluru. So that is very, so what has happened? 110 crore, more than 115 crore registered mobile number mean that all 10 digits of the mobile are being used. It must never happen. So probably in near future, your mobile number may be 11 digits. So that is what data is all about. So it requires a lot and lot of effort to understand, create data and see how you can use that data. Okay. Now in an accounting software, data may be classified as master data and non-master data. What exactly is master data? What exactly is non-master data? We'll be reading in detail. Just giving an idea to all of you to think on. See, master data are generally those data which do not change frequently. The change frequency of data is longer. Non-master data which change on a daily basis. So we have talked about this employee master data. So name generally not, name is changeable, but it generally, you don't change name every day. Once a while you change your name. Date of birth just does not change. So this becomes your master data. Non-master data would be like your attendance. That becomes your non-master. It's a regularly changing data. So when you say data, you talk about master data as well as non-master data. Relatively permanent. I have not said always permanent. Please understand, master data, that is relatively. Generally, you don't change it. Not expected to change frequently. Non-permanent data and expected to change frequently. So your name is, you have to answer. Your name is master data and your height is. Now I think you will be all grown up. None of you is going to grow further. That is what is my feeling. So for a kid who is in his or her teens, height would be a non-master data. But now because you all have grown up, you have crossed your teens. So probably height is also a master data as I read from here. Okay. So master data and non-master data. That is. Then when you say master data, what masters you are looking at? We already had a good discussion. Just build on that. Inventory master, accounting master, payroll master, statutory master, and just read the line I have added. Above is very important topic in relation to compliances that assessees need to complete. Please understand, we did have some discussion. Let us do it again in this chapter. So when you talk of master data, it is very, very important to fill that data correctly and accurately. An entity that ensures proper masters are created has better compliance of GST, TDS, to name a few. We already had a live example. Let us do it again. Let us go to the previous slide. Inventory master. So I am putting this question to you. I think you can answer this question. This will allow us to see the intensity of the relevance of creating master data correctly. So the question to you is, yeah, the question to all of you is that is GST paid? Listen to it carefully. And then we'll link into the system. Okay. Just see your accounting standard, how it has to be linked into system. Is GST paid on raw material taken as a part of valuation of finished goods? Listen to this carefully. Is GST paid on raw material taken as a part of valuation of finished goods? It's a pure accounting standard question, but it has to be built through system. I'll read the question again. You have to say yes, no. Is GST paid on raw material taken as a part of valuation of finished goods? Say yes, no. Okay. So I want to give this e-chocolate to Priyanka. She said, sir, height is partially master data. So she creates a in-between option, master, non-master, partially master. Great. It's increasing slowly. Good. Yes, Kanak Harini, yes, you have put very correctly. Okay. So Alok says yes. Manoj says no. Okay, so two options. Now let me read. Let us read. Let us see. So most of you are saying now no. Someone says yes. So again, it's a e-chocolate winning question. Good. I think two, three people have answered it correctly, so they all get e-chocolate. Jyoti, it is not to be included if credit is available. Siddhant, same. Pritika also correct. No. Okay. Yes. So Sharan says yes. Sharan, some issues, Sharan, at your system. No input. Yes. So Sharan has also said correctly. Now, what it basically means that just understand it and then we'll build into system. This is exactly what I want you to learn and carry, and this is going to help you do your audit well. This is going to help you do your practice well once you become chartered accountants. So the answer is, the question was, is GST paid on raw material part of valuation of finished goods? So you have answered correctly that if that GST I have a credit available, then I do not take this as part of my valuation. But if my credit is not available, I don't take input tax credit, then this goes to valuation of finished goods. This is what you are going to define here. System is going to talk about this. Definitions are going to come in your master. Now just understand that your inventory masters have to be properly defined to this aspect. Because if I don't define my inventory masters correctly, it is going to affect my valuation later on. That is very important. So there, that is the relevance of this inventory, accounting, payroll, and statutory master. Okay. So if you define your if you define masters correctly, you ensure that your compliances are also correct. Then, okay. So non-master data is, say, those which are changing, that is transaction salary. And someone said there, sir, your age is non-master. I agree to that. Fantastic. Because it's changing every moment of time. Okay. So more than one person asked to redefine it. Let us do it again. So see, please understand what was the question. The basic question was that whether GST paid on raw material will be included as a part of finished goods. That was the basic question. Now, from accounting standard perspective, what was the correct answer? You have all said correctly. Standard says that those taxes for which credit is available, they will not form part of valuation. So if I can take input tax credit on my raw material, whatever GST I have paid, it doesn't go as a valuation of my finished goods. But suppose my finished goods is exempt, not chargeable to GST, then I don't take a tax credit. So if tax credit is not available, then whatever GST I pay becomes part of my cost. Someone did say this way also. So this becomes part of my cost and then it goes to valuation of my finished goods. Now, this is an accounting standard concept, but this you have to configure in your inventory masters. That is important. So when you define your inventory masters, define your raw material master, define your finished goods master, there you have to say the ITC, how it is going to be accounted for. So that incorrect definition in master will lead to what? Incorrect valuation of inventory. If your inventory is incorrectly valued, your profitability will be incorrectly shown. So your balance sheet is not going to show true and fair valuation of your profit. That is the impact. Mohammad Abid has a very different definition for non-master, but I'll leave that. I cannot discuss here. Okay. Yes. So Ayush has said, so sir, master data is master configuration. Okay. Configuration of a software we talked about in business process automation. So once you basically define, configure means making it ready for the entity. Within that, you start defining. So yes, defining master data. It is very, please understand, whatever slide, I will put more than 2 minutes. That is a practice opportunity for all of you once you become chartered accountant. Believe me, all this where I expend or I discuss more with you is basically to create that understanding that once you become chartered accountant, this is a practice area. So I can define that for you. To configure masters is a practice opportunity that you must get in. That is the point. Okay, so Priyank, I'll do that. Okay. Yes. 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 So you need to define them correctly. Okay. So this has been a very intense discussion. So I think the idea is clear to all of you. Okay. Uh, yes, you can be. So Mohammed says, sir, can we be auditors? You can be. In fact, these ideas you can create. I understand many of you are in articleship. Many of you are going to go into articleship. So this idea you can discuss with your boss. It's nothing bad. It will become like a startup. Okay. Then non-master data. So transaction value, salary, changing data are non-master data. So that idea is also clear to you. Okay. This is important. So this I think is easy. Let us just read. We have already discussed. Changes to data, master data. Now again, let us do an exercise for examination. Suppose this question comes in examination. Write differences in master and non-master data. So what will you be your para 1? परीक्षा में ये सवाल आता है कि मास्टर और नॉन मास्टर डेटा में अंतर बताएं. तो आपके जवाब का प्रथम पैरा क्या होगा? Suppose this question comes in examination. Give the difference between master and non-master data. What shall be your para 1 of that? Okay. So Muhammad Abid has talked about Swift. Muhammad Abid, keep it with you. As soon as we join after the break, ask this again. I'll answer that. Okay. So, okay. So let us read. What you're writing in chat is the para 1. Okay. Good. So, yeah, para 1, very good. So definition of master and non-master data, and then you start writing the difference. So para 1 is going to be, and then again, see, please understand what I basically want is adding value to your answers in examination. So para 1 is definition, para 2 is main content, and para 3 will be examples. We have already discussed many examples on master and non-master data. I've already asked you that one thing that you can note from this lecture is the examples that we are sharing. Okay. So now let us read. Changes to data in master are less frequent, non-master are more. Entry, generally through drop down. Now, see, this is what exactly is this. So I need to give you through an example, illustration to understand. Say when someone did talk about Tally or accounting software. So when I create a ledger, okay. So then when I am creating a ledger, the accounting software asks me the group. So whether that ledger is a sundry debtor or a sundry creditor or an asset or an income or an expenditure or a direct expenditure, indirect expenditure, these are various categories of group. So when I have to select the group in system, there's a drop down menu. Drop down menu means there's a list. I have to select one. That means it's predefined. See, master data not changing, generally constant. That is there. In now, ledger creation itself, the name of the ledger I have to feed manually. Okay. So because that ledger I have to feed manually, it is like creating a non-master data. So when you're doing data entry, non-master data is manually fed, like transaction values. That is Non-master. So I have to feed it manually. The type of the voucher, cash voucher, sales voucher, purchase voucher, that I go by selection. So that is a way it operates in accounting systems. Then user option to modify. Yes. Now see this question, this point requires some discussion. I'm asking this back to you. Okay. You answer and based on your answer, we are going to discuss. This is very, very, very important. User option to modify. Now imagine I'm giving you two options. I'll ask you a question. Give a right answer in the chat. There are two people in the entity, an accountant and a manager. A manager accounts and an accountant. I'm putting this question to you. Suppose I want to change the credit period for a debtor. There's an accountant, a manager accounts, and I want to change the credit period of the debtor. So of the two people, who is going to be given option to change the credit period? Accountant or manager accounts? So you have to say the name, whether you say accountant or manager account. Now, once you answer, I'll discuss that. So very important discussion. Point number 3, users option to modify. So master data, we have already talked about that. It is basically permanent, generally permanent. So it doesn't change. Even if when it has to be changed, there is a way of changing it. We talked about day before this. Yes, the last discussion we had, I told you that in master list, write a line in bottom that every update in master will be audited through a substantial evidence. Exactly that point has come again. So changes to master are rare. Non-master users do that. Okay. You are answering the question. Who is going to change the credit period? The accountant or manager accounts? Then nature of accounts. Now, as we go ahead, in technology, this distinction of real, nominal, personal is being done away with. But for understanding purpose, you can take that master data are generally real, personal, and non-master are nominal, but that is for understanding only. Now, most of you have answered the question, manager accounts. Yes, most of you have answered it correctly. Manager account will have option of changing the credit limit. Accountant cannot. Accountant's job profile does not allow. In this chapter, we are going to talk about role-based access control. This is a live example of that. Accountant cannot change the master. So first thing is, can accountant change master data? No. Master data can be changed by manager accounts. Now, look to this. Please understand this. When manager account is changing master data, say for example, for a sundry debtor, where the credit period is 30 days, manager account is making it 60 in system. Now, when manager account makes it 60 in system, that does not mean that the authorization to make it 60 is with manager account. No, the authorization to make 60 is with the top management. So top management creates a debtors policy. In debtors policy, top management may say that all debtors with whom we had a turnover. I'm giving an example. See how things have to be processed in system. You need to gain understanding of this. Okay. Just don't remember it line by line, gain an understanding. Now, so what we are doing, what we are learning. So we have created a case on point number 3. First thing that you learn is, can accountant change master data? No. Second thing we are learning, who can change master data? Manager accounts. The example we have taken is, the sundry debtors credit limit is increased from 30 to 60 days. Now, when I say 60 days, is 60 days change being made by a manager account? But who has authorized the change? Authorization is not with manager account. Authorization is with the top management, those charged with governance, board of directors. They created debtors credit policy and they reviewed the policy and they revised the policy. And in the revised policy, it is written that all those customers to whom company sold product of more than 10 crores in the previous year and the payment has been generally regular, to all those customers, companies giving enhanced credit period of 30 days. So original 30 days period is now 60 days. So even when manager account is changing, just understand he or she is not the person authorized to change. The authorization is going to come from top management. He is implementing the change. That is very important. That takes you to the discussion we had yesterday about change of credit limits in masters. We talked about it. I told you that any change that is done in credit, any change in master has to be validated with substantial audit evidence. Just learn this example. This authorization by top management is your substantial audit evidence. What you are going to check, whether if the change is made, the systems generate report that is that this debtors limit has been increased to 60 days. You get the report, ask the question to manager accounts, who authorized the change? The manager account will give you the board of directors resolution to change. This is how systems are going to work. Okay. Then nature of account. So we have talked about. So this is differences. Okay. Then vouchers. I love this discussion on vouchers. Okay. So I'll be asking many questions because I asked you. So most of you said you know about all the headers on the slides. So I'll be asking questions. So definition and then types of voucher. What is a voucher? A documentary evidence of transaction. Very good. So you talked about that online. So one of the things I thought would be coming out, that suppose you buy a product or you order from an online food store, so you get an invoice, that becomes a voucher, documentary evidence of transaction. So that is a voucher. SA 230, documentation. Okay. Now these are types of vouchers. Uh, I understand most of these vouchers are known to you. What my core will be that we need to bring this in concept of the definition in system. So I'll be bringing those issues with you. Okay. Believe me, this list is illustrative. I'll tell you, we can add hundreds more in this list. So accounting vouchers, inventory vouchers, payroll vouchers. So contra is a bank cash voucher that you know. So I'm not reading that. You know that. So this is not, we want to learn. You are reading in your accounts and all those. Okay. Then payments. Payments. Now payment can be cash payment. Payment can be bank payment. Within bank, suppose you have multiple banks. So you can have, for example, State Bank of India payment voucher, ICICI Bank payment voucher. You can create. So see what I'm basically telling you, that you can further categorize the voucher based on the way you're operating. You can have a cash payment voucher separate. You can have a bank payment voucher separate. Within bank payment voucher, you can have a separate payment voucher based on the category of the bank. Does it tell you? I'll be asking a question. Does it give you a hint that when you categorize the voucher, one side of the voucher is predefined? Please understand. When you categorize a voucher, one side is defined that debit is this or credit is this. So the only thing that you have to put in system is other side. So say, for example, in accounting software, say Tally or any other accounting software, when you select a type of voucher, say ICICI Bank payment voucher. So the credit side is already fixed, ICICI Bank account. What only you have to enter is the debit side. That is why when you create this voucher system, it only shows you the other part, because the first part is already taken care based on the voucher that is selected. Okay. Then, so bank payment you can further categorize. Receipt, cash receipt, bank receipt, within bank receipt. Suppose all your India customers make payment in State Bank of India and your outside India customer make payment in ICICI Bank. So receipt voucher, you can have State Bank of India receipt voucher, ICICI Bank receipt voucher. Journal, a debit and a credit. Adjustment, rectifications are done through journals. Now the question that I want all of you to answer is, uh, can we have cash payment or bank payment as a JV? You have to say yes, no. Can we have cash payment, bank payment as JV, journal voucher? Then you answer, then we'll come back on this again. Okay. Then sales. So again, you can create hundreds of options in sale. Cash sale voucher, credit sale voucher. Within credit sale voucher, you can create, suppose you have big multiple products are there. So you can say have a butter sale voucher and chocolate sale voucher. So you can create multiple based on the cash. So you can further categorize. That is the point. So what sales voucher, which when I say sales voucher, my credit side is defined sale. What I'm only looking for debit side. To make it more easy, suppose I say cash sale voucher. So cash sale voucher is what? My debit is also defined and credit is also defined. So I have to only look for the value creation, the invoice, because I have to pay tax on that. Okay. Then purchase voucher. Again, can have cash purchase voucher, credit purchase voucher. I can have import purchase voucher. I can have domestic purchase voucher. So purchase denotes my purchase transactions. Then credit notes and debit notes. So Mohammed, help me. CNDNR credit note and debit note. Please understand. They had these credit note, debit note had been existing since lot of time. But after 1st July 2017, after GST coming into being, credit note and debit note have become very, very, very important because you can take ITC and give ITC based on CN and DN. So that increases the relevance of credit notes and debit notes. So to that extent, they become important. These are basically adjustments. Generally, credit notes and debit notes are associated with sale purchase transaction that you have done. Say you have bought some product, bought some item, the quality of the item supplied was poor. So you raise a debit note to the vendor that this quality is poor, or suppose the bill is for 100 units and you have received 90 only. So you raise a debit note. So because credit note, debit note as a voucher are within category of frame of vouchers through which GST credit can be passed or received, they have become very, very, very important. Then next is memorandum voucher. Now, okay, I want to come to memorandum voucher, but you have to answer a question. Okay. So you have to say whether you have read this in bank audit. Those of you have read bank audit, have you read about non-performing asset? So you say NPA, yes. And then based on your answer, we'll read memorandum voucher. But before that, you have answered my question on journal. I'm reading that. So many of you say no, some of you say yes. Yes. So Siddhant has good elaboration. No, journal doesn't include cash, bank, sale and purchase. Very good, Siddhant. Because sale, purchase, payment, receipt, these are already specially categorized. So they have been categorized, you don't bring into journal. So journal are basically adjustments, something that you need to rectify, or those like transactions which require internal accounting. They don't create an external evidence like that. So those are through journal. Having a cash payment in journal creates a risk. So generally, the accounting systems are so configured that you don't pass a cash payment, cash receipt, bank payment, bank receipt through JV. Very, very important. In fact, when you create the configuration of system for voucher configuration, you say there are systems which ask you that whether cash payment can be done through JV, you have to say no. Saying yes is a control risk. Very good, Bharat. Yes, Mohammad Abid has said correctly. Yes, Mohammad Aslam, memorandum is rough work like, yes, NPA, yes, great. So now, most of you have said yes, that means most of you have already gone through it. Now see, I'm bringing that aspect of NPA and then we'll link it to memorandum so that the remembrance become easy. The definition of memorandum voucher is that those vouchers, those transactions which are put in system but the accounting effect is not there. So transactions are recorded, but the accounting effect is not generated. Now, NPA, why I ask that? Because that is the live example where memorandum is used. It is defined there. Now, when an asset becomes non-performing, so what the bank has to do, we are not interested in the definitions. We are interested in linking memorandum to a non-performing asset. Okay. So whenever an asset becomes NPA, there are three actions banker has to take. First action is that whatever unrealized income is there, it has to be reversed. Second action is that now onwards, no income shall be booked, no interest will be debited to that account. And third option is a provision has to be made based on the classification. Okay, substandard, doubtful, 1, 2, 3 loss, you make a provision. So three actions: reversal of unrealized interest or income, no further booking of income on that, and provision as per classification. But what the banks do now, see what happens. Suppose the account becomes NPA today. So bank, sometimes it happens that the borrower becomes defaulter. Bank has to recover the due amount through legal channels, through civil suit or DRT, debt recovery tribunal. There are a number of NCLT. So through that, banker has to receive that amount. When banker goes to any court, any tribunal like that, banker has to tell to the court and tribunal, say, this is my total amount due. Now, interest is a time cost. Even when the account is NPA, what RBI says, you don't charge interest to the account, but RBI doesn't say you don't calculate interest. So what the bankers do, they create a memorandum account in their system where all NPA accounts are categorized as NPA. Their due interest for each year is calculated, kept as a non-accounting transaction. So the whatever interest is due is not further debited to the borrower account, which has become non-performing, but calculated in system and kept as a value. Why it is important? Because tomorrow when the banker has to file a case, banker has to tell this is the total amount due. So what bank will do? It will take the outstanding in accounts and take the value available in memorandum that this is the total interest for the period. So this is the outstanding as per books, and this is the outstanding we have not debited because the account became NPA today. So this interest is debited to memorandum ledgers. So this is a live example where memorandums accounts are kept, where you create a voucher, but that voucher doesn't create an accounting effect. That is memorandum. Good, Siddhant. Yes, depreciation you do through JV. Yes, Dhyanesh, interest is recorded in. So that is a live example. So now what happens? You have a live example of sharing it. That is what I want all of you to do. Okay. Yeah, Nikita has a question. When you pay at a departmental store by cash, Nikita, the bill that the departmental store gives you is your cash, is your voucher. And if you look on that bill, it says that you are made in cash, payment is made in cash. So that becomes your cash payment voucher. It's an evidence that the payment was made by you. Okay. Next, inventory vouchers. So first part was accounting vouchers. Second is inventory vouchers. Okay. Now please understand what our core of the discussion has to be, that how these are going to be built in an accounting software, accounting system. Okay. Purchase orders, sales order, stock journals, physical stock transfer, delivery note and receipt note. So we'll take one by one. Purchase orders. We have taken lot of examples on purchase orders, that my inventory level goes below, hits reorder level. My system automatically generates a purchase order. And today the way technology is, that my system is integrated to my vendor system. You know what happens? Just imagine what is happening. So here is my inventory system. The level of inventory hits reorder level. As soon as it hits reorder level, a purchase order is generated in my purchase system. This purchase order is automatically mailed to my vendor, to the mailbox of the vendor. Absolute integration. Okay, there's a word to this, what I've shared. We are going to talk about the word. The word is supply chain management, SCM. Just carry this word. Okay. So this is purchase orders. So purchase orders, because they affect the inventory part. When you say inventory vouchers, they are relating to inventory movement. So that is why you call them as inventory vouchers. Sales order, the reverse. The example of that snack seller I gave you, that they created a Google form and generated so much turnover. So when I suppose uh, you are the snack seller, I've got the Google form, I am filling the form and submitting to you. So my submission of that Google form with details of the snacks becomes sales order for you. So against that, you are going to supply me those items. So because again, it is going to involve the use of goods. So physical movement of goods. So inventory voucher. Then stock journals. Now stock journals. Okay, I want to come to stock journal, but before that, I want you to define a word in chat. BOM, bills of material. What is bills of materials? We call it as BOM, bills of material. BOM. Just write it in the chat. Then I'll come to stock journal. Then physical stock movement. That is, I have multiple go downs. So I'm moving my stock from go down one to go down two. Again, please understand GST being there. So if go down is within state, outside state, so this physical stock becomes critical, because then you have to mention all the details. You are moving from say state of Maharashtra to state of say Rajasthan, Madhya Pradesh, or to say you have a go down in say Arunachal Pradesh, and you are moving from Maharashtra to Arunachal Pradesh. So you're not selling it. Both go downs are your own, but because it's transferring, it's going from one state to another state. So the GST is there. There are declarations to be done. So physical stock. Again, why inventory? Because it involves movement of goods. Then delivery note. Delivery note is that suppose I'm seller of the goods, I'm selling the goods to you. So when I send the goods to you, I send it in cover of delivery note, and my invoice goes after that. So I'm delivering the goods. Again, movement of invoice. Receipt note, the reverse. So my delivery note for my customer becomes a receipt note for the customer. That is how you look at inventory vouchers. I want to read your answer of bills of material, what it is. Yeah, Manoj, e-way bill is going to be a voucher. And because e-way bill is very, in fact, you have asked a very good question, Manoj. So I want to give this e-chocolate to Manoj. E-way bill, basically the whole idea about e-way bill is tracking the movement of goods. So I leave this question for you to answer. E-way bill is going to be what from the list given. So we are giving a e-chocolate to Manoj for asking a good question. What is e-way bill? So is it an accounting voucher or an inventory voucher? I'm telling you, e-way bill is basically relating tracking the movement of goods. That is. Okay, bills of material. Good. So I'm reading, I'm accumulating. Yeah. So I think the best answer is from uh, Pritika, because it's a very important word to know. So this e-chocolate has to go to Pritika. List of raw material required for producing a unit of finished goods. Perfect. Very good. So stock journals are those. So from my stores, my raw material stores, when I issue goods for production, so I issue based on the bills of material of the item, because if I have to manufacture standard quantity of finished goods, I have to issue standard quantity of raw material. That is done through stock journals. So that is again movement of inventory. So that becomes an inventory voucher. Yes. So you have answered it correctly. So knowing, see, now it was a good question, because we have learned the definition. E-way bill is for what? Movement of goods. Now you have no second thoughts in answering. You're all correct. Okay. Then payroll voucher, attendance and payroll. So that is the category of vouchers. It's an illustrative list. You can add more to this. So feel free to add more. Then voucher number. Now this is going to be a phenomenal topic. In system, this is very, very, very critical. We'll put a lot of time into this, and I'll share many cases on this. Okay. So these are characteristics. Now, please understand, this is a suggestion. This need not be a mandate. Okay. But it's a good suggestion. Okay. So how your voucher numbers have to be? They have to be unique. That is correct. Then for each category of voucher, you have a separate series. So let us take it as an example. Cash payment voucher. So I say CPV 001. So cash payment voucher 001. Okay. Then prefix or suffix or both may be added. So you can have, like I said, cash CPV 001. So my original, the basic voucher number is 001. I have added a prefix, cash payment voucher. To 001 at the end of it, I can add this also. So just look at this. Cash payment CPV 001 0222. That means cash payment voucher 001 passed in the month of February 2022. So I can create prefix and suffix. Now, again, please understand this adding prefix and suffix has also got a legality to it. Within the GST framework, there are definitions of the size of the voucher numbers, that the total length of the voucher number. So you have to adhere to that length. Now, what has happened? Just understand, see, this voucher number is very, very critical to understand. Again, we want to link it to the system. Okay. Many entities, they have automatic process. I've told you that. Just consider this example. My reorder level is hit. I generate a purchase order. Purchase order is automatically mailed to my vendor. Now, my vendor must pick that purchase order. Vendor must pick that purchase order. So to be able to pick that purchase order in vendor system, you know what is important? My purchase order number has to be as per the guidance created by the vendor system. Please understand what I am talking about. So my purchase order, I cannot have a 20-digit purchase order number if vendor system cannot process a purchase order number beyond 10 digits. So this voucher number has become very, very important. I'll be sharing more cases on that because I want you to learn this way, that voucher number. When you, those of you are going in articleship, I'll tell you how you can audit just by looking at the voucher numbers. We'll do that. So you can add a prefix and suffix, and whatever prefix suffix you add, now because systems are being integrated, I talked about supply chain management. There's a reverse to that called as customer relationship management. So a lot of integration of intercompany systems is going on. So when you have an intercompany system integrated, your voucher number do not become your proprietary definition. It may be affected by the definition of the other person to whom you have integrated your system. So there is a possibility that your voucher numbers may be affected by the series used by a customer or series used by your vendor. So please understand, keep that tag. One second. When you look for voucher number, in fact, what I want all of you to understand, that when you go for an audit and you are looking at the voucher number, try to understand each word, each alphabet, each numeric used in the voucher number. Your understanding of that is going to create a effective audit. Take my word for that. If you can understand the way voucher numbers are created, the effectiveness is going to be phenomenal. I'm just giving you this. I'm giving this. It's more of an audit query, but it is generated through system. Okay. Answer this question. Just put your mind, heart, and try to answer this question. Okay. Suppose you are going for an audit and you are auditing, say, rent payment. You are auditing rent payment. When you are auditing rent payment, so in the ledger, the rent payment shows that this is, suppose I'm paying the rent and you are auditing my rent payment ledger. In the rent payment ledger, you will find the voucher type through which the rent has been paid. You will find the voucher type. Suppose I'm paying, so I can pay through bank payment. Generally, I'll not pay through cash payment. Generally, I'll be paying through bank payment voucher because I'm paying it, rent payment. How many entries will be there? 12 entries because I have to pay rent for 12 months. So 12 entries have to be there. Now the question to you is, when you look at that rent payment ledger, you need to see the type of voucher. You tell me, of the 12 vouchers, what possible combination you can see. So one possibility is all 12 are bank payment. Another possibility is all 12 are cash payment. Just evaluate, just look at it. And this is what is generated through system. So when you see those ledgers, in the ledgers, they show a voucher type category. So they print C. C stands for cash payment. They print B. B stands for bank payment. They print J. J stands for JV. So that is how the categories are printed. In the voucher series, that categories are built. So take this as a question that you are scrutinizing a rent payment ledger and you are looking in the printout to the type of voucher, whether it will be 12 cash payment or 12 bank payment or any other mode of that. So this is very important. Please understand your understanding of the way voucher numbers are generated through system. Next time, next day, suppose tomorrow you are going for an audit, believe me, first 1 hour, try to gain an understanding of the way system is generating voucher numbers. It is going to add huge to effectiveness of the audit that you are doing. Okay. So prefix, suffix, then they have to be serially numbered. Yes. And it's a big topic, serial number. We don't have time. That intensity is not needed right now. But serial number, it's a phenomenal thing to learn. And vouchers have to be recorded in chronological order, top down. The first, the second, the third, the fourth, fifth, like that. Okay. Okay. See, so there's a query to be answered, and allow me to repeat the question. The question is that you are looking to the ledger printout of rent payment. You're scrutinizing the ledger. Now, see, please understand, no one is using manual books. Everyone is using some software to do accounting. So from this software, the rent ledger has been printed. The rent ledger has to have 12 entries. 12 entries have to be passed by type of voucher. Let me go to the previous slide. Yeah. 12 entries have to be passed by type of voucher. So when you looked at to that printout, you see what is the type of the voucher. So 12 entries, whether it be cash payment, bank payment, JV, debit note, credit note, it is printed. So the ledger, the printout says C, D, B, J, like that. Okay. So I've got the questions. Okay. So I'll be answering the question. We'll complete this one. Good. So Sonalin has tried rent payment 1, 2, 3. Good. Bank payment 1, 2, 3. Good. Mohammed says, no, it's the type of voucher, Mohammed. Payment. Okay. Payment is good answer. Payment voucher, cash, bank, all serial. Yes. Suraj, I'll explain stock journal after this. Okay. Sir, is BRS bank reconciliation is a statement. It is not a voucher. Okay. So please, Bal Vinodini, your question requires some understanding. See, when you prepare a bank reconciliation statement, what you are doing, you are balancing the bank balance as per books, comparing it with the bank balance as per bank statement. So there are adjustment entries. For those adjustment entries, you pass, like for example, one of the adjustment entry that comes is bank has debited bank charges. Then you have to make an adjustment. So that becomes a bank payment. Okay. But to adjust those entries appearing in bank reconciliation, there is a possibility that you may have to pass a JV. It's a possibility. So BRS may force you to pass a JV, but BRS is a statement. It's not a voucher. Okay. Yes. So this e-chocolate has to go to Alok. I wanted you to say this, that there has to be, of the 12 vouchers, one voucher will be JV. Because March rent, you make a provision and then pay in the month of April. So this, see what basically is, these are system generated transactions, system generated values. We must be able to come back on this. That is what was needed. Great. So Priyanka has given a detailed designation to that. So good. A very good way of presenting it, Priyanka. Good. Then Bharat has a question. Can voucher numbers be based on month? Yes. The answer is yes. Yeah. Suraj, stock journal is basically, now I am answering Suraj's question. Stock journal is, uh, see what happens. I am a manufacturing company. I am making some product of specified finished goods. Now, because I have to manufacture finished goods in specified quantity, I'll require raw material to be issued in specified quantity. So that issue of raw material to production in specified quantity based on bills of material. What is bills of material? Bills of material is quantity of raw material needed to produce a single unit of finished goods that you call as BOM. That is issued through stock journal. So that voucher from stores department to production department, where raw material to be consumed in production process, that voucher is stock journal. So Suraj, you have to say yes if it is clear. JV is journal voucher. Jyoti, JV is journal voucher. In fact, you need not remember this, but just take it for this, that all vouchers are basically JV. It is going to have a debit and a credit. But when I say cash payment, the credit side has been defined as cash. Now I have to only define the debit side. So that is how. So voucher by name, content, intent, all are JVs. You are categorizing so that cash payment becomes separate, bank payment becomes separate. Still, few adjustment have to be made, like someone said, depreciation adjustment. That is through a JV. So journal vouchers are going to have a debit side as well as a credit side. Okay. Accounting flow. So this is easy. So we'll take a break after accounting flow. The traditional accounting flow, as we all understand, has fundamentally changed in this technology driven. Yes. So now, so this discussion is very important. This understanding has to go to all of us. So traditionally, it looked like this. So that is, you know what you call, you can carry this word. Huh? This is called as one to one. So voucher you create, enter into cash book, then from cash book, take it to ledger, post it to the ledger. From ledger, create a trial balance and financial statement. In fact, you must, all of you probably have not experienced it, but 25 years back during our articleship, we actually did this. So we had to make vouchers. We had to prepare manual cash book. Then manual cash book, we had to post it in ledgers. Then ledgers, the accounts were totaled and we had to create trial balance and ensure the trial balance was tallied. So once it was tallied, we will make financial statements. So this is traditional way of accounting. Now it doesn't exist, virtually does not exist. Okay. The principle of accounting remain the same, but this is not the way you are accounting now. The new accounting way is this. So transactions may be physical, may not be. So your basic vouchers are captured in your accounting system. And once captured, all other processes of posting, balancing, trial balance, from trial balance, profit and loss account, balance sheet, all is automatic or system driven. So this is a fundamental change the way accounting is being done in system. Very, very, very important. So that is from the traditional to the technology. Now, this will take after the break. So we are taking a break 10 minutes. 7:22 will reassemble at 7:32. So it's a break. Uh, Alok, you have a very specific query in flowchart. I'll try to find time to answer. We had one query more on that. Uh, P&L account, balance sheet are prepared manually. Yeah, Dhyanesh, now just imagine Tally, just for an example sake. So you make your accounting entry on a gateway of Tally first screen. You say balance sheet, it shows you balance sheet. You say P&L income expenditure, it shows you income expenditure. So it's auto generated like that. The only one adjustment you have to do, suppose you are a trading concern or a manufacturing concern, is valuation of closing stock. Rest everything is system driven. Then uh, during current period, we have only yes. So Alok, you only enter. Then Mohammed has a comment: will technology make us lazy? No. What will happen? Technology will allow you to improve the quality of work you do. So you will not be required to do the transaction, but you will be required to create the definitions, the next header, types of ledger, like, yeah. Okay. Yes, Alok. E-bill by the name, intent, content is inventory voucher. No confusions to be carried. Okay. So I've answered all. I'd ask someone to put the queries post this. Okay. So I understand all of you have put. Let me just refresh that. Okay. So now we are on types of ledger. Let us start. Now, I told you that our traditional definition of ledgers being personal, real, and nominal, that so we are not discussing that, not part of our discussion. But what has happened that over a period of time, as systems have come there, their definition of debit balance ledgers and credit balance ledgers are new definitions which have been created in system. So what I would say, debtors is a debit balance ledger, creditor is a credit balance ledger, like that. But see, this definition is again very important. We link it to something more practical. Let us go to the next slide. I'll share that. This is the basic classification that is being done in system. So when I say debtors, so you understand debtors is part of your assets. Then when I say share capital, it goes to parts of your liability. I say salary, it goes to the ledger type expenses. If I say sale, it goes to ledger type income. And within that, you can have subcategorization of types of ledger that we are going to read in the next header. That is grouping. So continuing from the previous one, the grouping is asset, expense, income, and liabilities. And here you can create what is subgroup. So within asset, you can create fixed asset, sundry debtors, investment, prepaid expenditure. So subgroups as ledgers are created within these assets. Now, please understand, yeah, Dhyanesh says capital is also there. Great. So capital will go as a part of liability. Within liability, you can create share capital, reserve and surplus, secured loan, unsecured loan, deferred tax liability, current liabilities, provisions. So these becomes type of liabilities subgroup ledger. Now, see this idea that debtors or in technology, you have debit balance ledgers and credit balance ledger is a very fundamental concept. Please understand. Suppose I say debtors with credit balance, it's an exception. Creditors with debit balance, it's an exception. So when such thing happens, system records these as exceptions. Like just for example, most of you have been seeing trial balance generated, say for in Tally. If you look to the trial balance generated in Tally, if you have these exceptions, a debtors with credit balance, if you print out the trial balance of Tally, it comes with a bracket around the balance, or the print out that ledger specifically is printed in bold to tell you that this is an exception. That is what you call as an exception reporting. So next, those of you next year of your articleship, I understand most of you are in first year of articleship. When you go to the second year of articleship, or when you get this chance of finalization of accounts, when you are going to do a scrutiny for balance sheet P&L, then one of the first thing that you need to understand, please understand what this is very important. One of the first things you need to take list is definition of the ledgers created in system. So suppose there is a ledger A, you have to see this ledger is within the group, sundry debtors as an asset. Take that list and then you start your scrutiny. You'll do a fundamentally effective scrutiny. That is important. So grouping of ledger, again, I told you that because whatever audits you are going to do now and onwards, it has to be in system. So you need to create a good understanding of system. So one of the very good understanding of system that you need to create is how the ledgers have been grouped. Very, very, very important. Yeah. So Shreya says PP, property, plant and equipment. Oh, Mohammed, you're not asking that question to me. It's not accounting class. Okay. Yeah. G with Jivitha, yeah, we have been talking during discussion, so no, nothing like separate. We have been putting that. I've been asking how you prepare question for exam. Good, Garvit, very good. So Garvit has put a very good question again. A chocolate winning question. Will software come? How a software will come to know about contingent liability? Very good. That means that becomes an adjustment that you have to do outside the software. I agree to that. That is how. Okay. Then what technology is creating? So technology, accounting software, I have added in bracket for that matter, any software. There is a concept of front end and back end. Now, when I say front end and when I say back end, what it means. So let us do practically. Say those of you who are in articleship and you'll be getting your, say, stipend checks. Just a moment. Give me a second. So those of you who are under articleship and when you uh, go to the bank and deposit your stipend check. So what you do, you fill the paying slip with your bank details, and then there is probably a drop box or there's a special window where you give your check for clearing. That becomes the front end. So front ends are those locations where the interface with customer is there. Say, for example, the example in the module is when you go to a restaurant. So the waiter or the team member at the restaurant, he or she collects order. Now you are people are collecting order on pad, iPad or mobile tab itself. So that becomes front end. So front end is where the system is interacting with outsider. That is a front end. Now, when you go to your bank and give the check at the counter, so that person is front end for you. What that person does, so that person gives it to another person just sitting behind that person to process it. Now, in small cities included, in big cities also, checks are image processed. So they generate an image of the check. So there are scanners available. So the check is scanned. So scanning is done. That image of check is sent to clearing house. Validation is done. So scanning of the check, sending it to clearing house, the validation that becomes the back end process. You see, operation not visible to whom, not visible to outsiders. That becomes back end. In case of restaurant, the team member who is collecting the order, he or she becomes front end because that person is interacting with the external entity. Then once the order is done, because it is collected on mobile tab, the person who is collecting the order, he or she presses submit. So it is automatically updated in the kitchen itself, the preparation room. So the order goes there. When the preparation is made there, that location becomes backend. Again, that backend is not visible to whom? To the outsider. So front end and backend relate to the individual who is looking at that location. Okay. Then more on this concept, working of a software. Let us see. Front end, back end, we have talked about. Okay. So I'm not defining. So we've discussed the front end and back end. It is that part of the software which interacts with the user. So that becomes front end. That part that is not interacting with the user directly, that is backend. Like just take example of the institute itself. So when you fill your exam form, exam applications online, so you're interacting, that is front end. When you submit and when it is processed at the institute server or database, that becomes backend. And the processing is done, validations are done, and then you are sent your admit card. So that is the output of that system. So we understand front and back end, why they are separate. Okay. So there's a detailed table in the module. So I'm bringing the module for discussion why front end and back end are there and why they are not one. Let us bring that table. Just give me a second. Yeah. Okay. So the table is visible. Why separate front end and back end? Why not one? That is the question we are answering. Again, the question may come in exam. Suppose this question comes, why separate front end and back end software? Why not only one? So a para one has to define what is front end, what is back end, and then you start in para to give this example. So reason, domain expertise. So waiter is expert in handling customer. A cook is expert in handling cooking. So what is basically the point being made is that you create the separation so that the person who is expert deals with that expertise to the related individual. So because waiter has been trained to deal with customers, he or she is an expert, allow that thing to happen. These two jobs are separate and should not be mixed with each other. Both the jobs must be performed with topmost quality. That is, in case of software, front end is meant to handling requests from users, and backend is storing the data and the handling of data. So that becomes backend. Then presentation. Waiter can present himself, herself as well as food in a better way because he or she has been trained like that. Everybody like good presentation. One cannot expect a presentable cook as he or she works in a kitchen. It's a good way of saying that someone has been given expertise in presentation. So allow that person to act as a front end. Front end software interacting with user is meant for presenting information in proper format, color, bold, italic letters. Backend is not for presentation. Backend is only for processing. So that is why you have a separate backend in software. Then user experience. Waiter handles processed food, not raw material. So he or she is presenting the food to you. Whole process of getting desired food from ordering to billing should be smooth and user experience should be very good. This is supposed to be done by well-trained waiter. This cannot be expected from a cook. Okay, so that is how you look at it. Front-end software should guide a user to desired report or feature. Front-end software handles processed data and not raw data like backend. User interface of front-end needs to be intuitive. That is, minimum use of help should be sought from user. So that is how you do it. Speed. After placing an order, customer expects a quick delivery of food. Nobody likes waiting period. This is possible only when there is a segregation. So that is well taken. So no need to read this further. Using a single software for both the aspect would unnecessarily increase the load and slow the speed. So that is why two ends are created. Language, yes. A waiter needs to be polished and polite. She needs to understand language of the customer. Speak to the customer in the language of the customer to make the customer comfortable. Cook is not supposed to interact directly with the customer. So the language barrier, language necessity probably is not there for a cook. So front end and back end. Front end speaks in language understood by the user and understands language spoken by the back end. Back end speaks technical language, not for any person, not for layman. So for these reasons, you have a segregation of front end and back end. Okay. So write examples at the appropriate location, Mohammed. So you'll always be able to revise them. Yeah. Then working of the software, application software. So what are application software? So I want you to give applications, example of application software. So I have not told you based on your understanding. I want each of them one to write a name of application software in the chat. Okay. Now let us read. So definition may give you idea. What an application software does, it performs many functions as receiving input from users, interpret the instruction, generate the output. Most softwares have following three layers: application layer, operating system layer, database layer. These layers are important. Please remember this: application layer, operating system layer, and database layer. We want to read them. Okay. So working of a software, layers defined. Application layer receives the input from user and performs certain validation, say user authorization and transaction. Operating system layer carries these instructions and processes them using data stored in database and return the result to application layer. Database layer stores data in certain form. So that is how application layer. Please carry these definitions. Important for understanding as well as for exam purpose. Okay. Now, before we go here, let us read your answers. Yeah. So good. Tally, ICI Board of Studies app. Good. Okay. So we'll carry this Board of Studies application. We'll carry next session also. Oracle Financials. That is good, Priyanka. Excel, Oracle Financials, Spreadsheet, Zero, SAP, Excel. So these are all application software. You know what is the commonality? Application softwares are which are generally available to users. So user gets their output from where? Application software. Great. So all of you have answered correctly. So that is how PowerPoint. Yes. So you can say MS Office like that. Now installed applications versus cloud-based applications. So let us read through that. Installed means which are installed on my laptop, desktop, my mobile. Cloud are which are available on third-party web servers. I need not install on my system. Programs installed on hard disk of users of computer, that is installed application. Cloud-based applications, these are not installed on hard disk of computer, but are installed on web server, available to user through internet and browser. So that becomes cloud-based applications. See, this topic is very important and very pertinent and relevant also. Okay, this is going to come in this chapter and it is going to be repeated in subsequent chapters also. Just carry this discussion. Okay. Table from the module, page 2.18. Just give me a second. So now we are reading difference between installed and this is very, very, very important. Please understand. Okay. The difference between installed and cloud application. So again, suppose this question comes in examination. So first define installed and cloud application, and then you start creating differences, and then you give example at the end. So when we close this discussion, we'll share cloud-based example also and installed application example also. Okay. As software is installed in hard disk of computer used by user. So Installed application, which is installed on your computer, that is installed. So it is installed on your hard disk. It needs to be installed on every computer one by one. So if you need that application to be used by say 10 people, the installation has to be done on 10 hard disks. It may take time and maintenance becomes tough. Yes. In cloud-based application, no installation is needed because the installation is on a publicly available web server. So you only need internet and browser. So you can directly access. No separate installation to be done by you, nor a separate maintenance to be done by you. Then accessibility. When can you use it? So a software is installed on hard disk of user computer. Users need to go to the computer in which is installed to use it. But cloud-based application, because it is available through browser access, you need not physically go, you can remotely access. And in accessibility, you could add a time 24/7. In fact, COVID lockdown 2020 March. So because most of the applications were available on cloud, you could access 24/7 basis. Because it's an installed software, you generally cannot use through mobile. If you try to use that application, install that on mobile, it is tough. But if it is cloud-based, then you can directly access through mobile. Data storage. In installed application, data is stored in your computer, your premise. So to that extent, you have control over that data. Data in cloud-based application is stored on the server of the cloud service provider. So that data is physically not available to you. To ensure the secrecy, ownership of data, you must ensure that this aspect, which aspect? That even if data is available with a third party, the ownership of data is with whom? You. So it must be written in your service level agreement. Very, very, very important. Service level agreement. You can be reading Standard on Auditing 402 SL, client using service organization. Very, very, very important. This brings automatically the issue of data security. As data is physically in control of the user shall have full control in case of installed application. But in case of cloud-based system, it is at third party. So your accessibility will be restricted based on the service level agreement. And that service level agreement must have these concepts of how backups are taken by the service provider, what is the disaster recovery plan used by the service provider. Very, very, very important. Jyoti, I'll answer the question. I've read it. I want to come to it. Yes. Performance. A well-written installed application shall always be faster than web application, because web applications performance is directly linked to the speed of internet. So if your internet speed is slow, the application many times you try to book tickets of movie online, order food online, you find that the speed is not there. Then it takes a hit. So in cloud-based, the speed of accessibility is directly related to the internet speed that you have with you. Flexibility. Because system is installed with yourself, it is more flexible. You can do a lot of updates and changes. In cloud-based application, the flexibility is not with you. It is basically with the cloud service provider. That is. Then coming to Jyoti, and someone had said, yes, ICI BOS is basically a cloud-based application you can access through your mobile. That is. So now you have example, live example. Okay. Then non-integrated system. So someone did talk about non-integrated system. Very small para is there. I think definition I have cleared. So let us read that non-integrated systems are those systems where the functions or the departments in the entity are not linked to each other. Those systems are non-integrated first. Second, these systems don't have centralized data. So each department, they are going to maintain their own data. So that becomes like a disadvantage for non-integrated systems. Now, beyond that, see, please understand, we must parallelly keep a track of how things are developing, how things are evolving, so that we don't appear outdated like that. So, suppose this issue of non-integrated system comes, so please give these definitions and write a line below that. The way things are evolving, developing today, organizations virtually have, all organizations have integrated system. The only aspect could be the number of departments they have integrated. Today, you do not have an organization that is 100% non-integrated system. There is a possibility that suppose there are 10 functional departments, out of 10, 6 are integrated, one is non-integrated. But that becomes a rare exception like. So today you don't have organizations working with non-integrated system. Today, most of the 99% of the organizations work on integrated system because the level of competition, the level of response time needed today is impossible to achieve in a non-integrated system. That can only be achieved in integrated system. This discussion is a very good starter to the next header that we want to talk about, that is ERP system. So we are going to talk a lot on ERP systems. I'll be sharing live examples I've created for you to get a feeling of how ERP systems are affected. Okay, how they are working. Okay, so we'll have definition, key characteristics, and then live example. Okay. Please understand each word of these definitions is very important. Okay. So an ERP system is based on common database and a modular software design. Modular means module means breaking. Now, please understand modular software design means what? So my database is common. Modular means I create modules for each function in the organization. So I create a module for plant property equipment. I create a module for material management. I create a module for sales and distribution. I create a module for production, procurement, product development, sorry, PD, product development. I create a module for human resource. I create a module for financial accounting. I create a module for management account. So modular. So multiple modules I create and it is linked to a common database. So what it ensures that each module is accessing the same database, but providing a different functionality. And each of the module is integrated together. That is the best part. Okay. The information should be reliable, accessible, and easily shared. The modular software design should mean a business can select the modules they need, mix and match modules from different vendors, and add new modules of their own to improve business performance. So suppose I'm an organization and there's a ERP system available in the market and it has multiple modules. I'm asking this question back to you. I've asked in a different manner. Now you need to answer in a different manner. So there are multiple modules: sales and distribution, materials management, logistics management, product development, financial accounting, management accounting, human resource accounting. These are various modules. You have to answer the question. I read the line. The modular software design should mean business can select modules they need. So the question you are answering is, suppose I am a business, which module I will select? I'll give you the options again. I am a business, which module I will select? So the options are sales and distribution, SD, product development, PD, materials management, MM, sales and distribution, SD we have talked about. So sales distribution, product development, materials management, financial accounting FA, management accounting MA, and human resource management HRM. So you have this 7, 8 options. SD, sales distribution, product development PD, materials management MM, financial accounting FA, materials management accounting MA, and human resource management. Which module you are going to select? Try to answer this. Okay. So ERP is going to allow you to select module based on your requirement. Mix match, whichever you need, that you are going to select. Okay. And once you have, so generally what happens based on some logic, that logic, so many of you have answered that. Based on the logic, the companies select the module to implement. They generally select 2, 3 modules of the available and implement. And once that implementation has been streamlined, customized, then they go for additional modules. Okay. So product development is by Mohammed, and Bala Vinodhini also says product development. Alok says materials. Parthasati says human resource. Dhyanesh says product development, says distribution. Good. And Shreya says material management accounting. And the e-chocolate goes to Jyoti because she says based on circumstances. That is the answer needed. Let me improve the answer Jyoti has given. I am going to select that module which is critical to my business operation. Please understand. I'll select that module which is critical to my business operation. So based on criticality. So I'll make a selection based on criticality of the, yes, Ram Babu Raman has also said based on requirement. So let us share the e-chocolate. Okay. That is how you're going to select it. Then key characteristics. Please understand, this is for discussion. Okay. Who is the enterprise? The user of ERP software. Then when I say ERP, what is the, so ERP is enterprise resource planning. So what I've tried to break the word. So enterprise is the user. What are the resources? So resources include men, money, material, machine, market, and method. So what my ERP system does, it integrates these resources. Please understand, we have already talked about when I say ERP means integration is a dimming provision. It includes integration. So what ERP system is doing, that is, it is integrating all these resources together. It is bringing them together on the same platform. So when all my resources are on the same platform, that lead to economy, efficiency, and effective use of the resource. When I use these resources with these 3 E, that leads to wealth creation, profitability, better business, better customer response. All these things flow because I have linked all my resources. So I generally call this 6M. It's learning discussion. Please understand, it's for learning purpose. I have broken down the word in 3 parts. ERP, enterprise resource planning. So enterprise is the user. Resource are 6M: men, money, machine, material, market, methods. Planning is bringing this together. That creates a ERP system. So it is integrated. What it does, it brings all business functions together. They are all brought together. ERP are special software. These are configured to cater to multiple department functions of an enterprise. So all functions of the department are integrated together. In fact, I'll show you a live, we'll run a live ERP right now. So I'll show you the level you can achieve, and then I will allow you to add to the quality of ERP that has been designed. Okay. So that thought process has to be brought. Then available ERP modules include, so these are generally one of the most used one: SAP, Oracle, MFG Pro, MS, EXA, PTA, QuickBooks, and there's an ERP by Microsoft by the name Navision, and there are other ERPs also. So these are the softwares which are used. Our banks use, generally our public sector bank use Finacle. So that is called as a banking ERP. So it's an enterprise resource planning software, but specially created for whom? Banks. So we are going to read more in chapter 5 as we go ahead. So what is an ERP's key characteristics? It's integrated. It brings all business functions together. It's a special category of software. These are configured to cater to multiple department functions of an enterprise, and available ERP software include these examples. Now, what I'll be doing, I'll be bringing a live ERP to you. Just give me a second. And then once we do this live exercise, I'll ask you to share where we can add this. What more could be added to this? Okay. So see, I've created a front end to that. So yeah, it's here. So front end is here. Example of ERP module, ice cream manufacturer. Okay. Now see what you will be visible to you. Let me increase the visibility of it. Yeah. So this is my sales order. So I'm getting sales order. Now, if you see, my present stock is 100 kgs of ice cream is there. So if I get an order of 100, do I have to, is there a shortage? No. So let us change this. So what I'm doing, I'm giving input of data. Okay. So let us do 50. See what happens. So the system tells that 100 is the stock, 50 is the order. So you still have available 50. Let us change it. Okay. Now see what I'm doing. Now I'll increase this quantity by more than 100. You just keep a tag of this. You know what is this? Milk, sugar, and other items. This is used for manufacturing the ice cream. So you know what is this? Can anyone tell what is this word? This is raw material. So what these three denote, please write in the chat box. Okay. Let me increase the sales order. So what I'm doing, I'm increasing the sales order to 150. 150 is more than the stock available. See what happens. Just keep an eye on screen. See now what has happened. My stock is 100. My order is for 150. That means there is a shortage of 50. Now, it says that to manufacture 50, I require 4,000 kgs of milk, 1,500 kgs of sugar, and 500 kgs of other items. This is, let me see if anyone has asked. Yeah, good. So Garvit gets the, good. So Garvit gets the e-chocolate. You know this 400, I'll show you. The calculation I'll show you. I want you to learn. So this is my bills of materials. What is my bills of material? That for 50 kgs of ice cream to be manufactured, I require 4,000 liters of milk. So if I divide 4,000 by 50, it will come to 00 goes and 80. So for 1 kg of ice cream, I am consuming 80 liters of milk. That is how I am calculating it. So I got my bills of material that tells me that because 50 kg of ice cream is short, I require 4,000 kgs of milk, 1,500 kgs of sugar, and 500 kgs of other item. What is the stock of the item available? 800 is available, milk, 150 kgs of sugar is available, 100 kgs of other item is available. That means 3,200 of milk need to be procured, 1,350 has to be, sugar has to be procured, 400 of other items have to be procured. Okay. Here is that multiplication of bills of material. Okay. So this is how this has been done. So this is visible. Then now what I have done, I've added a parameter to this. See, 150 is the order received. See, it says whether if you want to manufacture, the order has to be validated. What is the validation? Whether the payment has been received or not. So what I'm doing, I'm making this no. Let us see what happens. Because the account has not been validated, what it says, now the account is not valid. It gives a display on mobile of this, talk to accounts is a message that goes to the person who is collecting the order. So let me show you it. Let me hide it, make it more visible on the same screen. Yeah. So if I've taken order for 150 and if account validation is no, then the person who is collecting sales order, he or she gets an information. This order cannot be processed. There is a trouble in this, like that. But if it is yes, then the order goes ahead. Let us say if payment is not received, let us do it no. What happens? So payment is not received, then they are going to understand. They are going to create an option for that. So this is how you are going to. This is exactly how ERP works. Let me open all the hidden lines for you. Let us see what we see. Yeah. Here is the bills of material that I had hidden from you. So for each 100 kgs of uh, each kg of ice cream to be manufactured, what I need is 80 liters, 30 and 10. So if I say 250, let us see what happens. Oh, sorry. These changes were not supposed to be made. Okay. Yeah. So this is how you create a ERP system. All departments. So materials is linked to the sales is linked to production. Production is linked to inventory. Inventory is linked to accounts. What other departments can we link here? Can we link more departments to this process? So I want you to tell which department you imagine that can be linked here. That is the question. Okay. Now, so by the time you answer Suraj, both cases it is cloud. So there is no difference. The whole technology is cloud based. Okay. So you know what you could link to? You could link, suppose I have to manufacture 50 kgs. Yes. Production, purchase, order taking, very good. You could link into your HR. Human, see, for manufacturing, you will require people to work. So you need to see, suppose I have to manufacture 50 kgs of the stock not available. To manufacture 50 kgs, I require, say, 5 machines. So if I require 5 machines, I need to see how many machines are working. Suppose I have 10 machines, so 5 are working. But then for each machine, I require one operator. So 5 machines, 5 operator. So I have to see the attendance. So I can link it to the human resource module to check whether how many operators have checked in today. This is, and then you know what happens? Suppose today 4 operators have come. That means I will be able to complete manufacturing of 40 kgs. 10 kgs I'll have to manufacture tomorrow because the operator is going to come tomorrow. This calculation I link to my delivery schedule that 40 kgs we can deliver today and 10 kgs will be able to deliver tomorrow. That is how an ERP works. Just put more imagination what further you can link into this. Yeah, I'm doing that. That is Priyanka. Yeah. So delivery, very good. So purchase department was good. Delivery is good. Logistics, yes, are good. Let me create example for what Priyanka has said. It's ice cream. So these ice creams have to be delivered in this what you call as refrigerated vans. Now, for example, this 50 kgs. So to deliver 50 kgs, you require 5 refrigerated vans and availability is only 3. So that you link to logistics. Tell your customer that there are only 3 vans available. That is exactly that you are looking at an ERP system. Yes, Pranav. Link to customer. Fantastic. Distribution department. So you got the learning. That is exactly what ERP does. You know what you have done? You have interlinked the whole process to all the related departments. That is what ERP does. So let us see the 6M: men, money. Money means because you have to buy the additional, you must have cash flow available. So when you place an order for buying, the cash has to be available. So men, money, machine, material, method, market, everything has to be linked. That is what exactly an ERP system does. Great. Fantastic. So I think this idea is clear. So this, see, the best part, what I feel that we learn is the we need not imagine it. We see it happening. That is exactly what is the need of the art. That we must see how it is working. Once you have seen working, then you need not remember it. You will always do it better. So let us go to the PPT now. The last part of today's lecture, that is benefits of ERP system. So let us take them one by one. So the example that the core purpose of creating the live example was to help us understand all these terminologies. Okay. So information integration. So what we'll do, we'll take our example and then link into each of the headers. Okay. So information integration. Now what has happened? Suppose you have received the order for 150 kgs. Every single department head, starting from sales to production, to purchase, to stores, to logistics, to HR manager, they all know the requirement on the top of their, say, desktop, laptop, or to me personally, it has to be displayed on their mobile. This is what is needed to be done. Reduction of lead time. Lead time means, now lead time, we talked about reorder levels. In the calculation of reorder level, you have lead time, but lead time is applicable to all the processes there. So lead time means the time to manufacture. Lead time means the time to order. Lead time means time to get delivery of the product. So once you are able to track the shortage, the requirement, once that is so, look what shortages we talked about. We talked about shortages of available of raw material. We talked about shortages of available of machine. We talked about shortages of available of operator. We talked about shortages of available of delivery van. So once you know that these shortages are there, you can calculate based on that. You can create, you can forecast requirement. Once you are able to forecast requirement, you will be able to reduce your lead time. On time shipment. Perfect example. We talked about that 50 kgs have to be delivered. 3 vans, refrigerated vans are available. 2 more are needed. So you go for search for, say, transporter. If those transporters are available, who are going to supply you the refrigerated van. If they say we can make it available today, then you are able to do your on-site shipment. Or if they say they are going to, the vans will be available to you tomorrow, then you tell your customer that the delivery will be done tomorrow. So your communication becomes absolutely perfect. Reduction in cycle time. So cycle time is raw material to finished goods conversion cycle time, O2C, order to cash. We talked about that. So once you know what is the resource constraint, once you know what is the requirement of the resource, then based on that, you can plan it. Once you are planned, that is going to help you reduce your cycle time. Then improved resource utilization. Improved resource utilization is that what are the resources? Those 6 M: men, money, material, machine, method, market. So when you have you are able to integrate all those 6M, their better utilization is going, it will become a by default choice. You're not going to make mistake. Someone I read, just remember it. What gets measured gets done. You can write this also. What gets measured gets done. So what ERP allows you? ERP allows you to keep a track of non-performance. Because you are able to track non-performance, you are able to ensure performance. That is exactly what ERP is doing. So improved resource utilization, better customer satisfaction. Why? Because the customer, he, she, it knows that when the product will be delivered, the timing of delivery, everything is perfect. Like, see, believe me, all answer this question just for understanding sake. We have been ordering through all online delivery site. Be very frank. Give the answer in the chat box. Which website tells you the date of delivery and which ensures that the date of delivery is adhered to? आपको चैट में यह बताना है कि आप ऑनलाइन ऑर्डर करते हैं, इतनी सारी वेबसाइट्स हैं, जितनी भी वेबसाइट ऐप पे आप ऑनलाइन ऑर्डर करते हैं, उसमें से कौन सी वेबसाइट है जो आपको डिलीवरी की सही दिनांक बताती है और ये इंश्योर करती है कि उस दिन तक डिलीवरी हो ही जाए. Which of those online delivery ones apps ensure timely delivery based on the date they have intimated? That is better customer satisfaction. Then improved supplier performance. You know, this word, this is a discussion of ERP allows us to learn multiple words. There's a word that we have read, JIT, just in time. Just in time inventory management. You must have read somewhere else, JIT, just in time. So you know what ERP allows? Because ERP allows tracking of inventory that exists, tracking on inventory based on future orders that we expect. And we have linked everything to reorder level, linked it to our purchase orders. And these purchase orders are integrated to the system of our vendor. So supply chain management, this ensures that our vendors are updated to our requirement on real-time basis. It's a system trigger. It is going to be triggered on real time. So the vendor knows that when the supply has to be made, supplier performance will improve. Increased flexibility for decision, increased flexibility for operation, increased flexibility in terms of planning, because everything you know. So your resource utilization improves, your planning improves, your performance also improves. Then, yes, now reduce quality cost basically is that because your system tracking is perfect, you're doing absolutely well. So it ensures that the quality degradations are not there. So that leads to better quality products and the output is reduced quality cost. Better analysis planning. Yes, this is one of the best part because you have so much of data that is in system. So just for example, we talked about ice cream. Now we all know that if you consider 12 months of a year, generally in India, the major sale of ice cream are going to come in March, April, May, June, these 4 months, because these are summer months. But it is not that ice cream is not sold in the other 8 months, it is sold. So because data is available based on the order customer is planning, so the manufacturer of ice cream, he or she or it will know what is the quantity to be manufactured, and the more improved aspect is which type of ice cream, to vanilla, strawberry, thousands of flavors you have. So that analysis and planning adds to your, so you can have data analysis. Talked about, it's part of the chapter, data analysis and business intelligence. So you have so much data. Through that ERP system, you can go for better planning. Plan better, that gives the next one. Improved information accuracy in decision making. So better planning analysis leads to improved information and better decision making. And use of latest technology. Yes, I've told you. See, please understand, all technology that we imagine today, you talk about, you calculate, you think that I'm going to do this. Just imagine that technology to be implemented only and only through mobile. Believe me, that is what is there today. So these are benefits of ERP system. So that is for today. Absolutely on time. Let us talk about any queries you have. Yeah. So most of you, being online, I don't want to read the name, but most of you have answered based on your very personal experiences. Good. So someone says, Sapna says, generally now this online platforms ensure that the orders are delivered on time. Okay. Yes, in fact, few of the this online websites are delivering. I think 2 hours delivery in big metros they have doing. So yes, that is there. Okay. So any questions? 30 seconds for that, and we'll wind up for today. We are sharp on time today. Okay. So just a fast recap of what we did today. I'll just bring the main slide with the header. So we talked about system, process, technology, then within technology, data, master data, non-master data, how accounting technologies are evolving, vouchers, voucher numbering, type of ledger, grouping of ledger, ERP, the definition of ERP, the way ERP has to work, and the benefits of ERP. Yeah, look, one point. Okay, Alok, I'm noted your question. I think the page number is 1.73. Please write the page number again, and page 1.72. So take my word. Day after tomorrow, I'll start with that, and then we'll go ahead. Okay, at 1.73. I'm noting that. I'll surely explain. Thank you. Yeah, today's yes, Priyanka. I thought I'll share that with you. Today's National Mathematics Day. Srinivas Ramanujan, you must read his life. Phenomenal person. He was a genius on mathematics. I don't know whether you know it. He wrote 3,000 theorems that time, and no, theorems have to be proved. In those 100 years which have passed till now, people have started using those theorems and they are finding that the theorems written by him are all correct. He was a maths genius. The sad part is he died very early in age. I think in his early 30s he died, but he was a maths genius. Srinivas Ramanujan. Pranav, you put the page number which flowchart you want to talk about, Pranav, because Alok has said that I have noted. Next day we meet, we'll start with that. Yes, I know that. Okay, great. So thanks. Thank you for being there. And let me see the score we had today. We are already 5 centuries. Huh? So with a correction with Sharon's issue, it's 500. Yeah. I don't know, but we must read about Srivas. I'll request all of you to read. Yes, great. So thank you. Good night. We are closing. Bye.